Happy Friday, MJ traders and investors. It's Rod with Pow Group. Welcome back on The Pursuit of Wealth, your home for MJ stocks, crypto assets, news, and interviews. Also home to the best MJ community. As I mentioned, it's Friday, May 10th. Hope you're doing awesome. And in this video, we're going to be discussing MSOS ETF. We'll take a look at the technicals. I'll bring up the chart. We'll go over the price action, what to expect in the days, weeks, months ahead. But as always, this is not financial advice. This is for entertainment purposes only. And you should never buy or sell anything based on anything that I say or anything that I write. Also, spoiler alert, there is a bear flag, a bearish continuation pattern that we are potentially looking at confirming. We'll go over the bull and bear scenarios, what we need to see to confirm it, and what we need to see to negate it. But before we get to that, make sure to smash the like. It helps support me in the channel. It doesn't cost you anything. If you're new, you can subscribe, tick the bell, all that good stuff, and you'll be notified on any future videos or when I go live. Full disclosure, I do own MSOS in my MJ portfolio. If you haven't seen my MJ portfolio 2024 update, you can check out that video on YouTube. I essentially go over all of these stocks. I think I own close to 15 or something like that now, and I go over my percentage weighting in my portfolio for each one as well. You can also follow us over on X, formerly Twitter. The handle for that is @GroupPow. I'm going to be using that as my platform of choice going forward. So if you recall, if you've been following this channel for a while now and you've been following the chart, we actually had a daily bull flag that confirmed. We had a target. It was roughly 1130. We got pretty close. We hit 1096. So from a percentage perspective, we came just over 3% away from that target. Now we have the flip side of that, where we were in a daily downtrend. So we had this series of lower highs and lower lows. That constitutes a downtrend. An uptrend is higher lows and higher highs. So it would have been this example here, where we had our low, high of the bounce. We're bouncing because we're breaking the high of the previous candle. Then we started a consolidation, meaning we're losing the low of the previous candle. We formed a higher low compared to this low, and then a higher high compared to this high. That gave us the uptrend. Then we had another brief higher low and higher high. Then we formed a daily downtrend with a lower high and a lower low. Another lower high and lower low. Another lower high and lower low. And then the massive explosion after the DEA news came out saying that they were going to agree with HHS and start the process to potentially get it rescheduled. So it's not a done deal yet, but I think there's a 90+% chance that it gets enacted to Schedule 3, and each and every day the probability is going up with regards to the descheduling. So my descheduling senses are tingling, because if you haven't seen this video, I highly encourage you to go check it out. It's called Rescheduling versus Descheduling, and Could the USA Bypass Schedule 3? If you haven't seen that, I highly encourage you to check that out. I don't want to sound like a broken record and repeat myself, so I highly encourage you to go check that out. But this move all came off of the low, and we're not in an uptrend or a downtrend at the moment. We're flat. So we were in a downtrend, but once we broke the series of lower highs and lower lows, once we broke above 902, we were no longer in that lower low, lower high, lower low pattern. So once we broke above 902, we were no longer in a downtrend, but we still have yet to confirm a daily uptrend with a higher low and higher high. And actually at the moment, we're flagging out. We have a lower high forming and a potential for a lower low. And so far, this is a very weak bounce. If you take your fib tool and you go from, just like we did before on the bull flag, you go from the low to the high. You can see here we held the 0.382 fib, and then you take your measured move from the low to the high, you move it out to your 0.382 fib, and there you go. You got your target of 1130. And we came within 3%, right? And then same thing on the flip side. You just take your fib tool, you go from the high to the low of the dump, and then you take your measured move with your trend line from the high to the low there, move it out to your 0.382 fib, and it's saying 750. But we haven't confirmed it yet. We need to lose the low of the dump here. Support is at 876. If we lose that, then that's going to confirm the bear flag, and we'll be back in a daily downtrend. And we are seeing an EMA 12 and 26 bear cross as well. So all of these things are called confluence. When you see a multitude of different indicators, patterns, signals that are showing one particular direction. If we're looking at, 8 out of our 10 indicators are bearish, well, we're probably going to be bearish. If 8 out of the 10 indicators that we follow are bullish, well, we're going to be bullish. And if 8 of the 10 indicators are saying 750, well, we're going to start to put a lot of emphasis on that 750 area, right? That's going to be your target on the downside. But on the flip side, again, if you're looking at, $11 on the upside, and that's, matching with a lot of our weekly moving averages, we haven't retested them as resistance, and we had a bull flag targeting 1130. Well, we're going to be confident in that level being hit, right? And it was the same thing on the daily moving averages. You can see here when we were coming up, it had been a while since we got above all of our daily moving averages, and that put us around that $9 to $10 mark, and it wasn't surprising to see that. Now we'll look at some other areas of interest because of that bear flag target there at 750. What else can we see? So before we take a look at the moving averages and other indicators, I want to show you what we need to do to negate it. So in order to negate it, we need to get above the 0.32 fib. So anything under that 38% essentially retracement is a weak bounce. So if we break above, call it 974, then that's going to negate the odds, and then we'll more than likely start to trend back up to that 0.5, around that $10 mark, just over $10, and we'll probably start to go sideways and just tighten up in a type of equilibrium. So in order to negate it, we need to get above 974, and in order to confirm it, we need to lose 876, and then, like I said, we're targeting that 750 area, and that would more than likely bring us very close to daily oversold. I did mention that after the big DEA news and move, that hourly oversold would be a decent entry, and check it out. That's exactly where we were when we bottomed out here, was hourly oversold. And if you just entered there on that RSI touching down, because with that lower wick, we would have been, if you just bring up the RSI here, we were at 32. Anything 30 and below is considered oversold. So with that lower wick, we would have been in the 30s, so, or right at 30. So if you would have just entered there on that signal alone, which I called out, that would have been a nice swing trade opportunity of about 7.5%, almost 8%. And we are gearing up for an EMA 12 and 26 bull cross here on the hourly time frame. So we could see a little bit of relief here into Monday, but then, like I said, a very real possibility that we confirm that bear flag. There's also bear flags on some of our other leaders. If you take a look at CGC, it's been one of the leaders in Canada. It's actually a bear flag as well on the daily time frame. So again, if you're only looking at names, and you might be thinking, oh, well, that's an LP, it's canopy garbage, blah, blah, blah. Well, I don't care. If you're only looking at one stock or one, ETF, it's MSOS ETF, so it's a little different because it's a basket. But, if all the US companies are flagging, all the Canadian companies are flagging, well, that's going to add more probability that we're going to see that downside continuation, right? And Canopy's actually targeting 652. And something I wanted to mention is it's right smack dab in the middle of our moving averages. So we have the 50-day moving average at 723 and the 200 at 610 after a golden cross. So it's the same thing with MSOS. We have a target of 750. Now let's take a look at our moving averages. Again, that lines up with our 200-day moving average. Okay, what about the weekly time frame? Well, we have the 50 weekly there at 741 as well. So we have a lot of confluence and a lot of support in that 750 area. And we just had a bear cross of the stochastic and the MACD as well. The only glimmer of hope is that we did close above the 10-week moving average. But, in absence of a headline, if we don't get a headline or some kind of positive news, I think the likelihood of this playing out is very likely. The only thing I will mention is that the S&P 500 SPY is a monthly bull flag, and it's targeting about 620. So that would be huge tailwinds for the sector. But as of right now, we're not looking too hot. We could come back down and back test that 50 weekly there at 741, and we could test the 200-day moving average there at 768. But again, it's not about predicting, it's just about reacting. We take a look at the charts. As the saying goes, show me the chart, I'll tell you the news. And right now, it's just a matter of confirming or denying. And in order to deny it, to negate it, we need to get above 974. If we get above that, then we'll expect a move up to, 10s, maybe even 11 again, start an equilibrium, right? We have barely any resistance all the way up to 1137. So if we get above that 974, we could easily be back up to that $10, $11 mark. But if we fail to get above 974, it's a very weak bounce and a real possibility that we confirm that bear flag daily downtrend and a target of 750. So hopefully this video was helpful. I wish I could come on here and draw another bull flag for you. I wish we were, having bull flag after bull flag after bull flag, right? Going into the weekend, I would want nothing more. I own MSOS in my portfolio, but I'm not the guy that comes on here and tells you what you want to hear. I tell you what you need to hear, and I speak the truth. I read the charts. I try not to have a biased opinion. I just try to look at everything, through a lens of reality and what the most likely scenario could be. And again, a lot of our indicators are showing some red flags. And like I said, taking a look at some of the other peers in the space, it's not looking too hot. We also have barely any monthly support on TrueLeave. It's actually a pretty scary monthly chart when you think about it, but not surprising after, like a 400% move off of the lows. We're definitely due for a correction. So we had a pretty brutal sell-off yesterday into the close there on TrueLeave and Green Thumb, and I don't think a lot of people anticipated that after such blowout earnings and a great earnings report from both companies. But as of right now, they're on the OTC, right? They're not very heavily shorted, and there's just not a lot of liquidity and not a lot of dollar volume in those names, right? So it can be good and bad in both directions, right? The lack of liquidity can drop the stock price very, very quickly, but it can also raise it very, very quickly. And a lot of people in the US can't invest in OTC or on the Canadian exchanges. So they're only limited to MSOS or the NASDAQ listed names, right? That's why a lot of people are focused on the Canopies of the world and the Tilrays and the SNDLs, is because they're pumping their own bags, right? Of course they want those companies to do good because they own them. They're bag holding them, right? Or that's in their bag and they're pumping their own bag. But once we get uplisting, which Curaleaf has said that they're in talks with the U.S. major exchange, and we know the NASDAQ said it's warming up to Canadian companies with operations in the U.S. So might it be the NASDAQ? Who knows? But it's looking like uplisting, safe banking. Got to get the Wall Street banks positioned before any meaningful reform happens, right? Nothing in the world happens. Nothing happens in the world without J.P. Morgan, Morgan Stanley, Goldman Sachs, BlackRock, of the world, right? So, in my opinion, I think safe banking is going to happen. MJ banking uplisting is going to happen very, very soon. And then I think the most likely scenario is we get Schedule 3. If not Schedule 3, then descheduling. The CAOA to legalize weed right now, and we have, what else do we have? The States Act. But I think the most likely scenario, and each and every day, like I said, watch that video, rescheduling versus descheduling. The more I see, the more data I get, the more time goes by, it's looking more and more like descheduling could very well be in the cards in the next 6 months or so, which is exactly the time frame in the CAOA. All right, going to it there. I hope you have a great weekend ahead. It's Rob with Pow Group. Thanks again for joining us in the pursuit of wealth. Smash a like if you think I earned it today. Share the video with your network. I would appreciate it. Love each and every one of you who supported me along the way, and we'll see you again on the next video.